So good morning, everyone. Thank you for joining the webinar. Our webinar is on exploring options for mortgage document processing. We have a few benchmarks which can lead to insights and recommendations that can help you meet your organization's goals for operations. Uh, in this webinar, we'll have about 12 or 14 slides to go through. And so if you have questions during the webinar, please email them to me by replying on the meeting invite, and I will collate them and I will bunch the questions that are related to each other together so that we can have a more structured Q&A session, which will be at the end of the webinar. We have Vaibhav Gupta here, who's head of products, and his passion is converting IP to products. He's been in the mortgage space for a very long time and has worked on the loan origination, the LOS systems for different countries, which also includes US. We have Thomas Lin with us, who's a senior vice president, and he has 25 years of experience in mortgage servicing and originations in the United States. And with that, I think we can go to the next slide. So, gentlemen, it's up to you.
Thank you, Praneeth. So let me quickly introduce myself. I'm Vaibhav Gupta. I head the product business here at VisionNet, specifically TalkView.ai, which is our flagship solution. As Praneeth said, I've been in the product business for over 20 years. My passion is converting IP to products, and I'm pretty excited by all the transformation that's happening in the mortgage space today. And we'll discuss more of that in the webinar. Tom?
Thank you, Vaibhav, and good morning, good afternoon to those of you on this webinar. Nice to meet you all. I've been in the mortgage industry for over 25 years and have served in a number of different roles, from solutioning of technology transformation processes to business process outsourcing over the last 10 years. I've been in the mortgage industry for over 25 years and worked for a number of major financial institutions. Thank you. Vaibhav, back to you.
Right. So, Tom, let me start by talking about some trends that we've observed in the mortgage industry. The pandemic has been a good period in terms of business for the mortgage industry. In general, there has been a climb in volume and correspondingly revenue for more mortgage institutes. And that's something that we see in the graphs here. However, the worrying thing is that over the last quarter, we have seen the profitability dipping. In fact, for as many as 16% of mortgage institutions, there was a pre-tax loss that they reported. We, in fact, expect this trend to continue in the Q3 results as they come out. Now, why is that happening? If we see the next graph, which is around the revenues and expenses, we see that while the revenue growth was fairly good for the past 5-6 quarters, reaching as high as 5% on a quarterly basis, it's come down to around 3.5%, whereas the expenses have continued rising. This has put a lot of stress on the margins. And that's why you're seeing the profitability dipping for a number of institutes. Next slide, please, Praneeth. Now, kind of a validation with what we saw on the previous slide, we see that while the loan volumes climbed drastically over the past few quarters, they have started climbing down over the last couple of quarters. Of course, the fact that the inventory is at an all-time low is a major contributor. You don't really have as many new loans getting originated. At the same time, the production costs have continued rising. Now, this could partly be because the pandemic was an unexpected factor, which kind of put a spanner in the costing strategies that the institutes had, and they sometimes had to, look for ways and means for building up capacity which was disrupted by the pandemic, especially with the additional volume coming in. Now, how do you mitigate this challenge around dipping volumes and increasing costs, especially when you don't know what the next quarter is going to look like in terms of volumes? So technology is what we believe comes to the aid for handling this kind of a volatile situation. Next slide, please, Praneet. So let's take the example of Rocket Mortgage. We all know Rocket Mortgage is one of the largest players in this market. What we can see here is that, as compared to the average market stats in terms of, key performance statistics like loans per team member or turnaround time, Rocket is substantially ahead, at 6.7 versus 2.3. In fact, that 6.7 is likely to climb to 8.3 over this year. And Rocket is not an exception. According to KPMG, institutes that have invested in digitizing their solutions have witnessed a 20 to 30% top line growth and a 30 to 50% cost saving, and that too on a sustainable basis. According to McKinsey, it also brings about a reduction in TAT as much as 15 to 40%. So it's evident that digitizing the mortgage processes bring both short and long-term benefits to the organizations that do take that initiative. Right. So this is another survey that we encountered, and this was around the institutes that are investing in digitization. What we found was the top 3 drivers for mortgage institutes are turnaround time, that's number 1, followed by operational efficiencies and tech implementations and integrations. With turnaround time being the number 1 priority for all of them, right? Because the faster you get back to the customers, the more business you get. Now, while it obviously it makes evident sense to automate, the question often is, where do you start? So we believe this framework helps in making that decision. First and foremost, any step which has a predefined logic. This could be a set of policies, it could be a set of rules. Somewhere human judgment does not play a major role. That's a right candidate. Similarly, anywhere where a number of iterations take place or the same steps are repeated again and again, that again is an area where automation can play a major role. Thirdly, where you need to access information that's logged up into non-digital or physical forms, for example, paper documents. Getting that information extracted and then making it available to your system to make decisions on goes a long way. Finally, and this happens quite often in mortgages, where you have to refer to multiple data sources, and those need to be compared or verified. That again is an area where technology can play a huge role. Right. So if you look at the origination workflow, it can broadly be divided into these 5 steps, right? Loan setup, pre-purchase, underwriting, pre-funding, and post-closing. Each of these steps have a lot of potential for automation and for straight-through processing. Now, since the focus of this discussion is on document processing, any step in mortgage either involves a lot of documents, or it involves referring to information that's logged up in documents. So you pick up any step in the workflow, it's a ripe candidate for introducing a mortgage processing solution. Praneet? Yeah, Tom, go ahead.
Yeah, if you can go back to the prior slide. Yeah, so many clients today, if you look back 3 or 4 years, were initially just focused on document classification, leveraging some type of OCR product. That has evolved over the last, I would say, 18 to 24 months, where more organizations are now looking at other areas within the mortgage loan lifecycle as it relates to leveraging the technology for process efficiency and cost reduction. So while initially it may have been part of the loan setup process, identifying missing documents or extracting data or capturing data from a document to populate an LOS platform, the technology today is now leveraged for pre-purchase reviews in correspondent lending, pre-underwriting to move that loan much faster through the initial process so we can get a decision made much quicker, pre-funding, QC, and audit to ensure that the loan is being originated and the data is accurate, and then post-closing to mitigate any repurchase risk as you sell the loan into the secondary market. Those clients that have a more robust or essentially a technology roadmap will look at multiple areas within the workflow to leverage OCR.
Right. In fact, you brought an interesting point here, Tom. Next slide, please, Rani. So different organizations choose different paths for managing their cost through doc processing solutions. Of course, the most basic one or the simplest one is outsourcing using BPM services. Now, all major BPM providers today have some tech capabilities built in, along with the personnel that they deploy for processing these documents. However, usually this technology is focused more on automating their workflow or managing their workforce better, and not so much on bringing process efficiencies to the mortgage institution's workflow, right? So this is more around utilizing their resources better, and not so much towards providing a better DAT or a better accuracy. As we move further up, we the next set of solutions that we see are the ones that are usually provided by the LOS providers. So again, all major LOS systems would have some doc processing capabilities that they offer, usually as an add-on at an extra fee, since they are the easiest to use, easiest in terms of easy to deploy, being provided by a vendor that you already have on board. A number of mortgage institutions go for these solutions. However, the limitation here is that the coverage in terms of for example, the mortgage documents that they can process successfully is limited. Usually, it would not go beyond 50%. And what that means is, for the remaining documents, you would still need to go with some of the solutions. So you either go for another tech solution for getting you to the last mile of accuracy, or you use a BPM provider. So unfortunately, the second solution is not something that gives you that complete coverage and something that you can rely on completely. You saying something, Tom?
No, go ahead.
Yeah. Then, as we move further up, previous slide, please, Pranit. You basically have the RPA players. Now, there's many things that can be automated in a in a mortgage workflow, and that includes steps which are not really doc processing focused. So the RPA players, people like Automation Anywhere or Blue Prism and the likes, they also have some doc processing capabilities, either as their own functionality or through their marketplace offerings through other vendors. Now, since the focus for the RPA players is more around just eliminating the manual task, their technology when it comes to OCR or computer vision is not as evolved, since that's not their bread and butter, right? And therefore, the accuracy that they provide and correspondingly the lift that they provide to the doc processing needs are limited. Also, if you end up using them only for doc processing, the license fee may not provide you the right ROI. It may just turn out to be, a disproportionately high investment for you. Next slide, please, Praneeth. So that brings us to the other two doc processing solutions that we have seen being offered in the market. One, the one we'll talk about first, are the pure play doc processing providers. Now, these are referred to as IDPs, usually Intelligent Document Processing Solutions. This is a booming industry. It kind of came into being around 5-6 years ago, and you have unicorns and would-be unicorns in this space. Now, these are players with a well-defined technology roadmap. They use artificial intelligence and machine learning to improve accuracy over time. The limitation here is that it's a one-size-fits-all approach. The same platform will cater to mortgage, it will cater to insurance, it will cater to healthcare, and therefore, while the pure data extraction capabilities are good, they are not able to cater to the nuances of the mortgage business very well. You know how much variations we see in the mortgage data set, right, Tom?
Yeah, I mean, our clients express frustration and challenges in the document classification area, particularly around bank statements and appraisal reports and so forth that have variations in terms of format and what have you.
Right. So that brings us to the last category, which is doc processing solutions or IDPs that are focused on mortgage. Now, while they have all the capabilities that the pure play IDPs offer, they also bring in the domain specificity that's needed for this industry. Now, that means that they come with capabilities for handling the mortgage documents off the shelf. They can cater to the specific workflows, and they quite often don't limit themselves only to data extraction or to doc classification, but can also help in digitizing the QC steps, whether it be pre-underwriting or post-close and so on. So, if we plot them all on a map across their technical focus and the domain expertise that they bring in. Next slide, please, Praneeth. You would see a map like this, right? On the left, you have solutions which are good on technology, but have comparatively limited mortgage business exposure. And on the right, you have solutions which have better understanding of the mortgage business. So while the ones on the left can give you a good lift, they usually require long time in coming up, extensive training, and a lot of investment from the institute itself. In terms of the time from their people in reviewing the output and providing UAT feedback and so on. The ones on the right help you get started faster. But if you're using BPM, which is number 3, then the technology list is limited. So on the whole, to get the best of both worlds, domain and technology, the IDP players with mortgage domain expertise are, an institute's best bet.
Yeah, Vaibhav, I would say that in terms of customers that have approached VisionNet over the years, I would say the majority of them are coming from item 2 and 3 in terms of not having a good experience with other technology to the extent that they had adopted some technology initially.
Sure. I see that we've only. Can you have the next slide, please, Trini? So I'll take a minute to introduce our solution, VisionIt StockView.ai. Now, VisionIt has been in the mortgage business supporting our mortgage customers for over 25 years now, and therefore this solution was custom built for supporting our customers. It's an IDP built on the latest artificial intelligence and machine learning algorithms. It uses the industry's best OCR and computer vision technologies. At the same time, it knows the mortgage business in and out, and therefore the feature set is designed for catering to that nuance, whether it be the rule engines, the workflow framework, or the training studio, which helps you train the variations faster. It also is the data extraction that it does is very context aware. Sometime in mortgage documents for a given county, the field would appear at one location, while for another it'll appear on a different page. So that kind of context awareness is also built in. It has a large document library of 1,000+ mortgage documents that it supports out of the box, and over 4,000 fields that again are offered ready off the shelf. So it's really designed for the needs that we've encountered from our mortgage institution customers.
Vaibhav, I see that we have about 4 minutes left.
Yeah, so I'll just glance through the slide. We're already supporting a large volume. Our customers entrust us with more than 1 million loans annually, which means we process more than 400 million pages or images annually, and we do all of that at more than 98% accuracy. Across our customer set, we have seen a minimum of 30% reduction in cost and a 50% reduction in TAT. In fact, for some of our customers, we have a turnaround time as low as 20 minutes. Since most of our capabilities are available as a standard library, we can get people off the ground in as less as 2 weeks. You want to come over, Tom?
Yeah, just quick highlight. I think Vaibhav, you've already addressed some key highlights on VisionIt. Just as a brief background, VisionIt has been in the mortgage space for over 25 years. We have significantly grown over the last 3 years and have roughly about 7,500 employees on a global basis. We operate both onshore as well as offshore, depending on our clients' desired operational model, and we continue to grow. We've been exceeding, I think, a 25% growth rate year over year related to new customers with a specific focus on IDP related solutions.
Right. In fact, on the DocView side, we are seeing a 100% year-on-year growth, Tom. So it's really a focus area for the mortgage institutions today, digitization.
Absolutely. And before we go into questions, Vaibhav, for those of you that are going to be attending the MBA, we are a proud sponsor at this year's annual MBA in San Diego. I believe that's next week. And to the extent you're able to attend, would love to set up an appointment to meet you all and address any specific challenges you may have or any questions on our IDP solutions.
Thanks, Tom. We have a couple of minutes. So, Praneeth, can we take up any questions that we might have got from our participants?
Yes, I will do that. There have been a bunch of questions around implementations. That has been one of the questions asked, that best practices for implementations, what can we expect? How can we be better prepared? Some of the questions are around that.
Right. So I think one of the best ways to get a faster ROI is to know exactly what you want out of the solution. Figuring out which use case or which part of the process will deliver the maximum bang for the buck. Focus on that, and you will get started pretty quickly. So, for example, if you take an off-the-shelf offering from us, a standard deployment, we can get you running off the ground in 2 weeks. Whereas if you require an integration, it might take another couple of weeks if it's a standard LOS. Whereas for one of the boutique LOSs, it might take a little longer. So knowing what you need and prioritizing it would really help in getting one started fast.
It's coincidental that you talked about integrations just now in the previous. So anything around integrations that DocView has, and what are the benefits you get from integrations was actually the question. What are the benefits that you get from integrations? But what are the capabilities of DocView's integrations? That also is a good thing to talk about.
See, we are integrated with all major LOS providers, whether it's Encompass or OpenClose or Mortgage Director, and for major servicing systems like Black Knight. And we have a very rich API set. So even if it is not a system that we have integrated with in the past, getting a new integration in place is not a challenge, and we can usually get that done in a matter of weeks. You also had a question around the benefits. So
yes.
If you're doing an integration, the benefit, of course, is that the transfer of documents and then of the information processed by DocView happens through machines. There's no personnel involved. So we pick up the system directly from Encompass, if that is your LOS of choice, and then push back either the classified documents or the extracted information. Or if you have a digital QC use case that you're automating, then the pre-underwriting report and so on directly into the system. There's no human intervention required.
Vaibhav, what can you expect in terms of, or what can a customer expect in terms of accuracy leveraging this technology?
Yeah, so that's an interesting one, Tom, and that's often a one that is misleading when you go through all the collaterals that the various solution providers put up. No technology today can deliver 100% purely from purely using technology, because there are a lot of variations in the document itself in terms of image quality and so on. The best of technology can get you near 100%, in the high 90s, but that is also difficult to sustain given the variation in the input documents. At DocView, what we commit to our customers is a 98% accuracy, primarily through our technology solution, and any kind of exceptions that the solution might have. It encounters a new document, a certain image is of poor quality, or the document is skewed or something like that. That's something that our exception handling team would take care of before passing on the results to the institute.
And Vaibhav, how does artificial intelligence and machine learning come into play?
See, let's say a new pay stub or a new bank statement comes in, something the system hasn't encountered in the past, right? So the first time it sees it, it will not be able to recognize it completely. It'll see a pattern. It looks like a bank statement, but it's not one of the patterns it recognizes. So it'll throw up an exception, right? Now that exception will then be processed by our exception handling team, and that will provide a feedback back to our machine learning engine, right? And it would happen the first time. It might happen another 2, 3, 4, 5 times. But as soon as it has sufficient number of samples, usually anywhere between 5 and 10, the machine knows the next time the document comes in that now it is that new pay stub, and it classifies it accordingly. A similar logic works for extraction, but what we've usually seen is that classification is often a bigger challenge when it comes to document types and extraction. Once you've done your classification correctly, extraction is often the easier beast to solve.
Okay. Praneet, I know we're about 4 minutes over the allotted time.
Yeah, I think our questions are also through. We would like to conclude this webinar then by thanking everyone who joined in. Thank you very much for joining us. I hope this was useful for you all. I hope the information that we provided helps you in meeting the goals that you and your organization have, both on the operation side and the revenue side. I will be sharing the video and the PPT, the presentations with you in the coming week. So stay tuned for that. And again, if you're attending MBA, please do visit us on booth number 1100 at the San Diego Convention Center. You can also email me and I can set up an appointment. And our experts would be there, and we can take this conversation forward there. So thank you very much, everyone. It was a pleasure.
Thank you all.
Thank
Have a
you,
good day.
For your time.
Thank you, Tom.